My name is Eyal Hertzog. I'm one of the founders of Bancor Network. Bancor is a non-profit foundation, and I want to tell you a little bit about the story of Bancor, and I think it will help understand how we got into this space, what is the process that entrepreneurs in this new blockchain space can go through. So basically, the journey started for me in 2011 when I saw a piece about Bitcoin in some conspiracy blog, and I got super excited about that technology, and almost immediately decided that I want to focus on that, and I think that it can bring a lot of change and a lot of new opportunity. It was the first user-generated currency. Now My previous company was MetaCafe, which was all about user-generated content, user-generated video. And seeing the first user-generated currency was really a big deal for me, and it was traded all around the world. We started to kind of think, what do we want to do in the space, me and a couple of friends. And the first thing we did was to build an environment where everyone can create his own currency for his own community, and see how to interact with that. We did that in 2012 and 13 and 14. But the thing is that it was not sustainable for the long term for some reason, and we started to research why. Started to understand why people are using it less and less after it's completely exploded in the beginning. And we found out that the problem was lack of liquidity. So it was disconnected from the entire financial network. And we heard the term, the Internet of Value, from time to time. What do we talk about the Internet of Value? Because we know the Internet. The Internet is a platform to transfer information. Information is usually expressed in letters, while value is a quantitative parameters. It's something that represented in numbers, and when I transfer value to someone else, then I don't have it anymore, unlike information. So it's a whole complete system, and it's based on those different assets. We can call them currencies, we can call them securities, all those liquid assets that I can transfer between. I can change my shekels to dollars, to Apple stock, to Bitcoins, to Ethereum, and it all happens using a vast network that is made of exchanges. Exchanges with order books, with pairs of currencies being traded to each other. This is how the Internet of Value is connected. These are the routers of the Internet of Value. But guess what? Those are not automatic routers. Those routers have people, traders, market makers, that actually bring the liquidity to the exchange. It requires labor. And obviously, we knew that we cannot get liquidity for a small currency with 10,000 mums, because no market maker will trade that currency, no exchange will list it. So is that currency doomed to be disconnected from the Internet of Value? We didn't like that resolution. So we started to think about it and experimented with that. And when Ethereum came out, it was the first time that we had a blockchain that allows us to build applications, actual application, because Bitcoin was a blockchain, but it was just one currency. Ethereum allows you to build your own application and issue your own tokens. All those ICO we hear about are tokens that are issued on Ethereum because it's a platform where you can build apps. And because of that, because of Ethereum coming out, we started to think maybe we can create a protocol that would solve this liquidity problem in a whole different way. And this is where Bancor protocol was born, essentially. And Bancor is a different approach to liquidity. It's not based on market makers. It's actual network. It's completely automatic and completely decentralized. It works using automated market makers that are set up and configured in order to enable liquidity at all time. And you essentially, when you want to convert currency A to currency B, you do that with a smart contract that has liquidity pool, And the smart contract, whenever you do that, changes the price in which you can buy the currency. So if you buy a currency more and more, its price will go up. If you sell it, the price will go down. But you don't need someone on the other hand doing that transaction with you. Now, that's a big difference. It's almost like the difference between a phone call and a text message. A phone call requires someone on the other side to talk to me, while a text message allows me to communicate the same way. It doesn't need to be synchronous. It can be asynchronous. And this is what Bancor is all about. It's about asynchronous liquidity, which means that the liquidity is guaranteed. There is no liquidity risk. There cannot be a situation where any token in the Bancor network, any token that is connected to it, and any token can be connected to it, there's no situation where it's illiquid. Now, when I tell that to people from the financial market, usually they get agitated. And I found that interesting because it is a financial innovation. I'm not coming from a financial background. We're coming completely from the outside. We're coming from the need, from, they say necessity is the mother of all invention. And this is where we came from. We built a big project. We were vested in it. We needed liquidity. We couldn't get it through exchanges. We had to build another system. And when we did that, we found that the biggest challenge for us is to explain what we did. And obviously, it's much easier, in our case, not to explain it, but to launch it. So we are part of a very exclusive club of ICOs that actually launch a working product to the network. And everyone can use it right now. People can go to Bancor.network, and they can convert between different tokens. So we had last talk talking about why tokens are interesting and what we can do with that. Bancor lets you convert any token to any token, and you don't need to look at the volume to see if there is a liquidity like you would in exchanges, because the liquidity has to do with how big is the liquidity stake, essentially. How big is the liquidity pool, and not what is the current volume. And today you can trade over 55 tokens on the Bancor liquidity network, which is, again, it's completely centralized. And it's the first time that you have liquidity with no labor. It's the first time that you can convert between tokens, and you don't need market makers. You're not relying on them. So that means not just continuous liquidity, but also cheaper liquidity, because it's automatic. It doesn't require people that do that for profit. And the most interesting thing that we didn't plan for, but we just found out about it, you familiar with the problem of pump and dump? In Hebrew, haratzat menayot. It's a structural problem with the current way we exchange assets. And you need laws all around the world to forbid people to engage in those activities that make it seem as if some stock or bond is raising in value. Well, essentially, it's people that are trading with each other. And we found out that because we are not based on people trading with each other, but we are a system which is based on a central, on a liquidity pool for each pair of tokens, you cannot pump and dump. You cannot do those things that are essentially a market failure. And we found out because people did try to pump and dump Bancor. They did try to fake some volume and fake activity and push the price up artificially, and they failed miserably. So this is not where we started. We started with let's make user-generated currency a reality. Let's make it simple for people to build currencies and use that as a technology, as a tool, as something that we can use for our day-to-day life. And we took a journey that really ended up in building a network of value, the internet of value. An internet of value which is not based on people trading and working in order to connect that network together, but a network that is based on currencies that are directly connected to each other. And I invite everyone to check it out at Bancor.network. And we're looking forward to continue and operate and build this space and industry in Israel further. Thank you very much.